Welcome to Channel's Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half an hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show, an end of an era. Earlier today, Japan's long-standing Prime Minister Shinzo Abe resigned due to ill health. I'll be speaking with Han Tan from Forex Time about the country's road to economic recovery and how markets have reacted to Abenomics coming to an abrupt end. And, according to Kenya's central bank governor, digital finance is the key to post-pandemic development on the continent. I'll be discussing some of the barriers to adopting digital financial services in sub-Saharan Africa with Michael Simeon, the CEO and co-founder of the digital financial bank services app VPD, and Anthony Coleman, a principal economist at the African Export-Import Bank. Then later, some headline-making company news. Just after the recording of this week's Channel's Business Global, news broke that Prime Minister Shinzo Abe, Japan's longest-serving premier, had announced his resignation because of poor health, ending a stint at the helm of the world's third biggest economy. Well, for more on this major business story, let's talk to market analyst Han Tan from Forex Time Limited. He's joining me from Kuala Lumpur, Malaysia. Han Tan, as always, it's a pleasure to have you on Channel's Business Global. We've actually inserted this new interview because just after we recorded our last interview, it was breaking news that the Japanese Prime Minister Shinzo Abe has resigned. We almost saw it coming, but it's still a shock, isn't it? Tell me how the markets reacted.
Yeah, so markets had a clear risk-off tone to it. Well, specifically Japanese assets. You had the Nikkei 225 closing 1.4% down lower to enter the weekend. Topics down 0.7%. And the Japanese yen reclaiming that 105 handle against the US dollar. I think there is a tremendous amount of uncertainty now, although, like you mentioned, some segments of the market had been expecting it, but even members within his own party were surprised by that announcement. So I think, moving forward, there are some very key issues that have to be addressed before markets can have more certainty around the Japanese outlook.
Let's talk about Abenomics. Before I started hosting this show, wasn't really familiar with the term. Abenomics has been trending in some regions on Twitter. How important is or was Abe's economics plan, and are we likely to see it going forward?
Well, the short answer is yes. Look, we don't expect massive changes to the overall structure of Abenomics. Now, if you kind of look back, essentially what Abenomics was about was this ultra-loose policy that helped to also stem the strength of the Japanese yen. But then, moving forward, whether or not it was successful and will his successor continue in that vein? We think so to a large degree. But of course, investors are certainly viewing these latest developments through the eyes of policy continuity. So again, yes, market expects Abenomics in some shape or form to continue, but by how much? That's the key question here.
I want to talk to you about the broader economy. Last week, 7.8%. That was a contraction in Q2. They fared better than other G5 nations, but Japan was still in trouble way before COVID-19 took hold. Are we likely to see a slower recovery? Abe earlier today, he said that he wanted to step down because he didn't want to distract from this economic rescue plan. Is it going to be longer without him as the head?
Well, whoever his successor will be, I think what's obvious is that the immediate priority is to make sure that the pandemic can be constrained, right? And then they can, once they get a grip on the health crisis, then they can hope to see the benefits of the tremendous stimulus measures that they have already rolled out in the Japanese economy. I think on the fiscal side, some 2.2 trillion US dollars worth of stimulus has already been rolled out. Given the headwinds that the Japanese economy is facing right now, and as you rightly pointed out, has been facing even before the pandemic, I think all that makes for a slow and perhaps a bumpy recovery.
As soon as the news broke here in Britain, I've got to tell you, it was all over, all of the channels. It was a really kind of stark breaking story. Even one person actually called it noble for him to stand down, considering he is the long-serving Prime Minister, and I believe next year is when his term was due to come to an end. You're in Malaysia. What's been the regional response that you've gauged amongst your network and just observers?
Yeah, look, Prime Minister Abe was certainly a stalwart when it comes to managing Japan's ties, not just here in the region, but of course around the world. For Asia in particular, he was certainly seen as the cheerleader of the TPP, the Trans-Pacific Partnership, and especially steadying the ship once President Trump had made his intentions known to withdraw the U.S. from that partnership. And then keep in mind, for Asian economies, including Malaysia, we had to contend as well with China's overtures, so to speak, with the seemingly competing trade deal. That was the RCEP, right? So, Prime Minister Abe was certainly seen as a guiding hand in ensuring that ties among the major economies were, properly handled, and then ensuring that there is somebody towing that line, so to speak, for perhaps some of these smaller economies in the region to follow. So, that said, I think these are big shoes to fill for whoever his successor is. But again, like we mentioned earlier, I think any potential instability or uncertainty that comes out of this transition, I think it will be transitory.
Well, Han Tan, Senior Research Analyst at FXTM Forex Time from Malaysia. Thank you so much for this last minute analysis there. Really much appreciated. Thank you. Now back to our regular programme. In other news now, the COVID-19 pandemic has increased the use of digital services. During the global lockdown, digital finance in particular has been essential to facilitate many of these processes, enabling people to pay for goods and services, receive compensation for their work, access social assistance payments and secure financial support such as bank loans for their distressed businesses. Total access to the digital economy is not available across swathes of the African continent, and this week Patrick Njoroge, the governor of the Central Bank of Kenya, suggested that fully adopting digital finance tools can play an important role in preventing people from falling into extreme poverty. For more on this, I'm now being joined by Michael Simeon, the CEO and co-founder of the digital financial bank services app VPD. Michael Simeon, it's always a pleasure to have you on Channels Business Global. Recently, Patrick Njoroge, the governor of the Central Bank of Kenya, he suggested that technology, in particular new digital finance tools, can play an important role in preventing people from falling into extreme poverty. Do you agree with that link he's made there?
Well, first of all, thank you very, very much, and good afternoon to you on your show. I totally agree with that. I think that the pandemic totally presented opportunity, a very unique one, which can allow a lot of people to better their life through digital finance flow. So I totally agree with that. And I think there's several ways how you can achieve that. If you look at it from personal level and individual level, you can say technology will allow people to retrain and also to have online transactions, offer themselves to a larger pool of customers than only the local society. And if you look at it from government point of view, it allows government to rearrange within innovation at a cost-effective price.
When we talk about digital services in Africa, it's always described as a disruptive sector, and I don't really understand why, considering it appears to be just a natural progression of how consumers spend their money, save their money, look at how much they've got. Why is it a disruptive sector when it's just a normal norm?
No, I think that the technology is just more than just allow you to pay your money in and to see what you have in your bank account, what you don't have. I think with artificial intelligence in finance now, you don't have to come in or have to think too much or have too much knowledge about where to save your money, how to get best value for your money, where to get cash back. All these things on technology and they are providing enabling grant for people to get better for their naira or for their dollar or for their pound. So it does just more than that with artificial intelligence, with robot advisor, You can go on our platform, put your money in, and it will tells you automatically, autopilots your finances for you.
Absolutely there. I've got to say, Michael, describing, you kind of have done that for me. You've described the kind of ecosystem, but can you go into a little bit more detail? I know that Vogue Pay, your remittance platform, has now evolved into also providing digital banking services. How has the central bank reacted to this development, not just speaking personally for yourself, but from other fintech disruptors as they're described?
All right, okay. As you can see, that there seems to be a lot of new fintech, from VPD Money, which is ours, to Kuda, to V Banking, to recently announced Sparkle. This is a new generation, it's a new way in financial services. And the way we're doing this, before, if you want to onboard, if you want to open bank account in Nigeria, as an example, you have to go on bank fund. You can't do that. But now, with the help of BVN, you don't have to do that. You can open, even in the lockdown, you can open your bank account, have your account, have someone pay you money, and have you pay money to someone else. So the idea of people queuing in front of banks in the scorching hot sun is strange to me, because technology have taken us forward than that. And I think majority of, in terms of central banks are doing their best, although they still need to work in certain areas. For example, we are trying to introduce where you can digitalize check. If someone writes you a check, you can use the app to take a picture of it and submit the check into the banking system. So all these things are ongoing engagement for the CBN, and I hope that they adopt all these things are adopted on time, because the world has changed. We are in the era of new normal, and new normal brings opportunity and challenge. And the world will determine the losers and winner will be the regulators.
Absolutely, there. We are living in a new normal now, aren't we? Can you describe, and let's not just look forensically at the global south, let's look at the globe as a whole. How do you think the digital economy will evolve as we are entering this new normal? I can't remember the last time I used cash in London, for example, but what are the other ways that the digital finance could potentially change our lives?
Yeah, I think before, the changes have been happening over the years, over the last decade. But the pandemic have brought a lot of things forward, especially a lot of regulators that are reluctant. If you look at example on Visa International, they announced something recently that they're looking at connecting crypto to the app. Now, ordinarily, Visa will not get involved in such those kind of play before, but everyone have accepted, and well, some people are still accepting that we're entering into a new technology age that brings a total way of the way you consume your financial services will be totally different from the way your mom or our parents or our uncle have been doing so. Because the millennials or the generation Z or generation Y or Z, the way they consume things, they consume in what we perceive as a lazy way, whereas they consume things in a smarter version in comparison to generation before them. So all this technology, whether it's a KYC, how you onboard customer, how you do your risk analysis, how you do your reconciliation network, how you consume the what they call the tech regs, which is technology regulation, how you consume that. All those things have been decentralized into bits. It's almost like Lego. So everyone, you just pick your color. If you want to build a tower building, you select the color that you need to build that tower building. If you want to build a bungalow, you select the piece that you need. That's how the finance have been decentralized into bits. And I think a lot of changes are happening fast.
Well, Michael Simeon, thank you for that look into the future. Hopefully, those things will be coming soon, not just to the West, but to everywhere around the world. Michael Simeon, the CEO and co-founder of VPD, Vogue Pay Digital. Thank you so much for joining me on Channels Business Global. Thank you. Coming up on Channels Business Global, I'll be talking more on Africa's growing digital financial economy with Anthony Coleman, a principal economist at the African Export-Import Bank. See you after the break. Welcome back to Channels Business Global with me, Juliana Olayinka, from our studios here in London. In a moment, I'll be speaking with Anthony Coleman, a principal economist at the African Export-Import Bank. But before then, here's some company news for you. The British tech startup Melody VR has made a surprise $70 million swoop for the music streaming platform Napster. London-listed VR specialist is to take over Rhapsody International, which trades as Napster and is currently owned by Nasdaq-listed Real Networks. Napster made its name as an illegal music downloading platform after its launch in 1999, but has since moved on to offer a model offering licensed track to both consumers and other businesses. The cooperative bank is to shed 350 jobs and close a quarter of its branches as it wrestles from the fallout from the coronavirus pandemic. The troubled lender announced earlier this week that it would shut 18 of its 68 branches by the start of December. It has selected the sites that will be closed based on an analysis of the number of visits made by customers last year. The bank, which has 3,175 employees, said that, aside from the specific branches affected, the reduction in staff is expected to focus on middle management positions and head office roles. Virgin Atlantic has won backing from its creditors for a £1.2 billion rescue plan that would secure its future for at least 18 months and save 6,500 jobs. The airline said shareholders, banks, aircraft owners and suppliers owed money had approved the plan. Virgin Atlantic said the agreement puts it in a position to rebuild its balance sheet and welcome passengers back. It had warned it would run out of cash by September without the deal. The company will now need approval from the High Court in London, which it will seek next week. Now back to our topic on Africa's digital economy. This week, Kenya's central bank governor said that digital finance is key to post-pandemic development on the continent and can prevent millions from entering into extreme poverty. For more on this, I'm now being joined by Anthony Coleman, a principal economist at the African Export-Import Bank. Anthony Coleman, thank you so much for joining me on Channels Business Global. I've got to say, ever since the British Prime Minister Boris Johnson declared there'd be a lockdown here in London, I haven't used cash. Everywhere you go, they want cashless payments. You're all tapping. And it seems to be the progressive norm. Why isn't this the case in Africa?
Thank you for having me, Juliana. It's good for us to meet again. I think what you intend saying was that over the past few weeks or months, you have not undertaken transactions using hard paper cash or coins because this has been made possible for you to use some code, some chip, some sensor, or a special portable device to be able to undertake transactions. In other words, we are gradually referring to what we call digital financial services, and that's what we are using. Now, the restrictions that have been imposed is drumming home the fact that we do not necessarily need to have person-to-person interaction. We do not necessarily have to move from one place to the other in order to have access to our basic needs. We can have our basic needs through the use of credit devices, payments, remittances, credits, through certain digital platforms that are established or that have been set up. And this is what we call basically the fintech, without necessarily moving, but using digital devices to undertake what you would rather have use physical cash to undertake at the convenience of your home, the convenience of your office, or in the convenience of anywhere you can find yourself. It is not the case in Africa simply because the requisite infrastructure for digital financial services is currently not available or non-existent or even if it is at a limited level in the continent of Africa. Now, let me give you something which will blow your mind. Can you believe that if you make a call from a place like South Africa to Ghana, it costs you more than making the same call from, say, South Africa to the US? Can you also believe that we live in the continent of Africa, but by and large, to be able to move from one African country to the other, in most of the cases, you would have to travel outside the African continent, sometimes through Europe, and then come back to Africa. Why? Simply because the requisite infrastructure to enhance this movement, either communication, either travel, are really not
Anthony,
available.
I've got to come in there, and I agree with you, by the way. Fortunately, I haven't been in a position where to get from, Lagos to Nairobi, I've had to travel through Paris. I know many people have, not just because of the cost, but just because it's much easier. But you spoke about infrastructure, and when we're talking about hindrances to Africa's development, infrastructure is always at the top. If it's not corruption, it's infrastructure. But when is the private sector going to grab hold of this issue and run with it? Why do we constantly keep going back to bad governance, bad planning? Shouldn't the private sector be strong enough to leap forward with this?
Exactly the point, Juliana. The Africa we want, as envisaged in the Agenda 2063, is a very important partnership between public and private sector. In other words, the challenges we face as a continent should be seen by the private sector as avenues for problem solving, or should be seen as opportunities in order to make contribution towards the development of Africa. You're absolutely right. The government cannot always be relied on to do everything we need or to do everything we want. It is time for the private sector to see the challenges the continent faces as opportunities to do business and as opportunities to intervene in order to forge ahead this public-private sector partnership engagement.
Thank you for agreeing on that point. Let's talk about the private sector. Let's talk about fintech. In fact, before the break, I spoke to a young man who has his own fintech company, pretty positive about the government, gave glowing reports about Nigeria's central bank. But there are others. There are horror stories from young entrepreneurs, fintech companies that say there's just too much red tape. They're trying to bring in digital finance to assist with the poor, but there's so much bureaucracy. It's even still described as a disruptive sector, and I want to know why the established banking system would consider digital finance a disruptive sector when it's so important. We have the central bank of Governor of Kenya saying that this is going to assist in people not falling into poverty.
All right, thank you, Juliana. It's seen as a disruptive sector because it is a revolution, so to speak. Now, I do not necessarily think that the central banks are pushing back. I don't think that is really the issue. We are in an era of what we call money laundering. We are in an era of massive wrongdoing. It is important for regulation. It is important to ensure that as we delve into the area of fintech and as we delve into the area of digital financing, the appropriate structures are in place in order for effective regulation and to ensure that even as we make the right choices, we are not doing more harm than good. When you go to a place like Ghana, let me tell you something. The telcos, the telecommunication giants, they come under the communication authority. The banks come under the central bank. The question that comes up is, in the use of the mobile money payments through the phones, how are these regulated? Where do they come under? What laws do we have to put in place to ensure that even whilst we adopt the fintech approach and digital financing, we are not in the long run going to harm the economy. Now, the thing that is needed to be done is for the major stakeholders to be at the table and have a conversation in order to develop what is workable and to ensure that we push forward the agenda of digital financing across the continent.
Gosh, Anthony Coleman, principal economist at the Africa Import-Export Bank. We've run out of time, as I expected with you, because there's so much to learn from you. Thank you so much for joining us on Channel's Business Global. And we must revisit this conversation again soon because it's of such importance. Anthony Coleman, thank you. Sadly, that's all we have time for today, but do get in touch with your comments and suggestions. I'll see you at the same time next week for more in-depth business analysis on Channel's Business Global. Goodbye.